In the world of Forex trading, what's traded is simple money. But we're not talking about physical money. No coins or paper notes changing hands here. Instead, Forex trading involves the buying and selling of currencies. Now, I know that might sound a bit abstract, but let's break it down with a simple analogy. Think of it like this. Buying a currency is similar to buying shares in a company. However, instead of owning a piece of a business, you're essentially owning a piece of a country's economy. When you buy a currency, you're betting that the economy behind it is doing well, or at least that it will perform better in the future. For instance, if you were to buy Japanese yen, you're essentially buying a stake in Japan's economy. You're betting that Japan's economic situation is stable or improving, and that the value of the yen will go up as a result. If you're right and the yen becomes stronger, you'll be able to sell it back at a higher price, making a profit. But here's the key point. Exchange rates, or the price of one currency versus another, are constantly changing. They reflect how the economies of two countries compare to each other in real time. So when you trade currencies, you're actually trading opinions about the strength of economies, both now and in the future. How currency trading works? Let's make it a little more relatable. Imagine you're heading to Japan for a vacation. Before you board your flight, you stop at a currency exchange booth at the airport to trade your US dollars for Japanese yen. You check the screen and see the exchange rate. Let's say 1 US dollar equals 100 yen. You hand over your $10 and get 1,000 yen in return. Congratulations, you've just participated in the Forex market. Now suppose your trip is over and you didn't spend all your yen. Unlikely if you were shopping in Tokyo, but let's dream. When you go back to exchange your yen for dollars, you notice the exchange rate has changed. Now $1 equals 90 yen. Suddenly your 1,000 yen is worth more in dollars than when you first exchanged it. You've made a small profit simply because of the change in exchange rates. This, in essence, is how Forex trading works. But instead of traveling to another country to exchange currency, you're doing it online through brokers. Buying one currency while selling another, hoping to profit from the shifts in exchange rates. What are the major currencies? Now, when you first dive into Forex trading, you might be overwhelmed by the number of currencies out there. But don't worry, you'll mostly be working with what's known as the major currencies. The major currencies are the most heavily traded currencies in the world, representing some of the largest and most stable economies. Let's go over them. USD, the United States dollar, also known as the buck. EUR, the euro, used across the Eurozone, and sometimes referred to as fiber. JPY, the Japanese yen, simply called yen. GBP, the British pound with the nickname cable. CHF, the Swiss franc, often called the Swissy. CAD, the Canadian dollar known as the loonie. AUD, the Australian dollar, also known as the Aussie. NZD, the New Zealand dollar, affectionately called the Kiwi. These 8 currencies are considered the majors because they dominate the Forex market in terms of trading volume. They're involved in the vast majority of Forex transactions every single day. And because these currencies represent some of the world's largest economies, they tend to be more stable and predictable compared to other currencies, making them the go-to choices for new traders. Currency symbols and codes. Let's dig a little deeper. You'll notice that currencies are represented by 3-letter codes. These codes are a standard used around the world known as ISO 42177 currency codes. The first two letters of the code usually represent the country, while the third letter stands for the name of the currency. For example, USD-US stands for United States and D stands for dollar. JPY-JP is for Japan and Y is for yen. NZ stands for New Zealand and D stands for dollar. These codes make it easier to identify and trade currencies on the global market. A bit of currency history. Here's a fun fact. The British pound is the oldest currency still in use today, dating all the way back to the 8th century. It's a currency with a rich history and has stood the test of time. Meanwhile, at the other end of the timeline, we have the Zimbabwe gold, or ZiG, which was introduced in April 2024. This is currently the world's newest currency, having replaced the Zimbabwean dollar after years of hyperinflation and economic challenges in the country. The many nicknames of the US dollar. And while we're on the subject of currencies, let's not forget that the US dollar, buck as it's often called, has a whole bunch of nicknames. You've probably heard some of these: greenbacks, Benjamins, cheddar, bread, moolah, and the list goes on. There's even a fun fact tied to the US dollar in Peru. Locals often refer to the dollar as Coco, which is short for Jorge, the Spanish equivalent of George. This is a nod to George Washington, whose face appears on the $1 note. So next time you're working for some extra dollars, you could say, I gotta go get that cheddar, or gotta make those Benjamins. It's all the same currency, just with a little extra flavor. Why Forex is so popular. Aside from learning about different currencies, there's another reason why the Forex market is so popular. It's open nearly 24 hours a day, 5 days a week. This is because the Forex market isn't confined to one central location, like the stock market. It's a decentralized global market, meaning trading is happening across various financial hubs around the world. Whether it's Sydney, Tokyo, London, or New York. When one market closes, another one opens, allowing for continuous trading action throughout the day. For Forex traders, this offers incredible flexibility. You can trade whenever it suits your schedule. Conclusion. So, to wrap it all up, what's traded in Forex? The answer is currencies, and through Forex trading, you're essentially buying and selling shares in economies around the world. As you start out, you'll focus on the major currencies like the US dollar, euro, and Japanese yen. And remember, the value of these currencies is constantly shifting based on economic conditions, making the Forex market an exciting and dynamic place to be. So get ready, study the markets, and soon you'll be buying, selling, and profiting from the ups and downs of the global currency exchange.